One of the three cylinders that silver can run on is the one that the big whales or people who are stacking silver in New York are using. This is due to the fact that the COMEX silver supply in New York just keeps going up. Over the previous 3 days, 17 million ounces of silver have been removed from SLV, the only method silver supply are decreasing in the ETF. If retail investors aren't interested in purchasing the ETF due to a lack of attention, the only way that could happen is if some whales are removing silver from it. How come they are oblivious? Reason being, people are still naively believing that they can purchase a lot with the vast sums of money they have invested in the AI bubble and other inflated markets. If, on the other hand, you happen to own silver instead of S&P 500, things will change. People will begin to flee mainstream equities and bubble stocks in favor of the unproven safe havens of gold and silver once the Dow and S&P become notably cheaper in terms of silver. Our journey is far from over. Where does COMEX silver stand, though, if we visit the COMEX? In search of a trend, here's the silver supply beginning in 1971. That might provide light on the current situation about the silver supplies. From almost 8,000 tons at the start of 2024 to 16,543 tons at the present day, this is the dramatic increase. In just over 2 years, New York's silver reserves have more than quadrupled. That is terrifying. And a lot of silver is being put into cold storage instead of sold, so it's going offline. Some are up for grabs. Much of the silver that is supposed to be sold against contracts and registered supplies is actually not for sale since it is ineligible. These stackers of whales are enormous. We have no idea who they are, but for some reason they are stockpiling massive 5,000-ounce bars. But if we examine these small rectangles, I thinned them out so you can see what they bracket. We can see that this is the 1980 run, which begins at the tail end of 1979 and continues into the beginning of 1980. That is the significant increase over here, the silver supply situation. While silver supplies were significantly higher in 1971 or 1970 than in 1970 or 1980 in New York, there wasn't much of a movement in that direction. However, since silver prices were falling in a descending triangle from 1983 to 1993, it's clear that silver supply was increasing from 1980 to 1993. At this point in time, Buffett, that guy Warren something, I forget his name, is involved. Around this area, he waited for the delivery of silver. The silver supply began to decline at the same time, yet the price of silver remained relatively unchanged. There is thus little evidence that the silver price is directly proportional to the amount of silver stored in the COMEX vaults. The same was true in 2011. There was hardly any connection. You can observe the rapid increase from what appears to have been $12, $15 in 2010 to $50 in only a few short months in 2011. Here, silver supplies are not moving much. A small decline occurred, but nothing to be concerned about. Here we can observe the events that transpired in 2020. Silver supply, silver price, and the duration between the lockdowns, those miraculous medical breakthroughs that spared our lives, and 2022 were all declining. A doubling of the silver supply and a more than doubling of the price is something we have never seen before, though. For the first time ever, silver stacks on the COMEX have moved skyward, and the price has gone vertical along with them. We had never seen that before. Can you explain that? This portends the beginning of a new era. Why is this taking place? The dollar's demise will cause silver to reestablish itself as a medium of exchange, as there will be no other means of payment after the credit system fails, and all other assets become derivatives of money. However, the source of the demand is unclear. Will it be the exchange-traded funds? I don't think so. This is a close-up shot. Just a moment, and we'll enter the more distant magnified chart. As you can see, the ascent isn't very steep. Ascent is required. Even though it's not a particularly steep ascent, the last 3 days have been. These 3 bars add up to around 17 million ounces that have been removed from the ETF in just 3 days. 17 million ounces leave the exchange-traded fund and return to storage facilities in London or New York. The low level of retail demand for SLV and similar ETFs allows them to pull this off. The alternative would be to artificially inflate the silver price by adding more silver to the ETF. The fact that this is falling indicates that fewer retail traders are interested in silver at the moment. It isn't rising fast enough, but it will, which in turn means that fewer ETFs are being sought after. So there isn't any demand for stackers in the physical markets or ETFs, and as I mentioned before, my discussion with Brian Kuzmar confirmed that the spreads are wide, so clearly there isn't any activity or demand. My intention was to delve into the silver squeeze here. However, as we can see from the ETF demand, the only event that significantly boosted ETF demand was the silver squeeze, with the exception of this section, which was the post-lockdown silver frenzy. The silver stacks did really experience that massive movement. Silver in the SLV ETF amounts to this amount. Between the lockdowns and the middle of 2020, it increased. August 2020, I believe. Until the silver squeeze, after which it dropped, it remained rather stable. Therefore, we can observe that there was some ETF demand here in 2011, 2010, and 2011 Morality 50, but not much. It was noticeable to be sure, but not enormous. Surely it wasn't like this at all. Thus, it is clear that not even the 2011 surge significantly impacted the market for ETFs. There was some, but there wasn't a lot. As far as ETF demand is concerned, silver squeeze was the sole significant factor. There it was. Here we can see the change in silver prices from 27 to 48. Now let's talk about a silver price doubling. Where did SLV go from here? 440 million ounces decreased to 487. Roughly 40 to 45 million ounces. There isn't much there. Demand in SLV has been low. Just think about where the silver price will be after the physical markets, ETF markets, and the New York Stacker, if they are still active, all get rolling. I mentioned it since it will be in the hundreds and might happen shortly. A bet on Substack's endgame investor for premium users. There isn't a lot of time left, but if you obtain all the new paying subscribers, we'll also receive that suggestion. I'd like to start by talking about U.S. real estate through the lens of gold, because the number of ounces of gold needed to purchase a single house has hit a new low. We were able to break 120 ounces. My 2011 low point has been reached at this point. In September 2011, gold reached an all-time high, and then experienced a bear market. Well, it was a breeze. Whatever you call it, we hit a triple or quadruple peak. Right here. That opposition was too much to overcome. At less than 120 ounces of gold per house, we are today. As things are, it appears to be around 70, therefore I anticipate a decline to 1980 levels. There will be lower peaks in Weimar. Keep in mind that a fancy Berlin house might be yours for around $100. 150 milligrams of gold. I anticipate that we will spend some time there. Although it won't last, for a while you can purchase a decent-sized house for around 5, 6, or 7 ounces of silver. Just like that, it will be. Because the stackers will have far more than that, it won't matter at all. Where does silver fit in? That, though, at around 5,000 ounces, we haven't encountered resistance. And we haven't broken through the trend line either. It could be 4,900, 4,800, or a number similar. In any case, this trend line dates back to 1980. Here we may observe what we were discussing, possibly 700 or 1/500 ounces in 1980. We need to break through 10,000, and this trend line, and I don't know what it is, but we will. Even more so than with gold, this figure will decline at a quicker rate. It is expected that we will fall below the 1980 line. You should be able to purchase a respectable property for perhaps 75 to 100 ounces of silver for a brief duration if we do reach the Weimar area. Not finding the best deal is a priority when you're in that situation. At that point, silver prices will be extremely low due to the extreme desperation for actual currency to divide labor. But you'll have to make do with whatever is available because silver is essential for everyone. UK real estate? I was simply interested in perusing that. All of them come from goldcharts.us. 100 ounces of gold is being asked for a house in the UK real estate market. The average price of a home in the United Kingdom is this. The precise accuracy of these is unknown to me. These are just estimates, but the pattern is plain to discern. We will surpass 100 ounces in the United Kingdom. Well, here's one more chart for you. Gold for UK homes. We surpassed 10,000 ounces, as you can see. Now that we have a trend line, we are at 9,922. Forgot to include it in this section. From 1980 forward, I believe we remain on that line. In my opinion, we are exactly where a trend line would indicate, beginning with the 2011 high and ending at this point. Plus, it proves that I'm completely ignorant, naive, and a complete moron, since now more than ever, the daily repo volume exceeds the available reserves. Every night, the repo markets see trades worth more than $3 trillion, dollars, and the available reserves are around $2.966 trillion. Dollars. That implies there are more dollars being traded each night than there are dollars in circulation. Somehow, this is achievable. You have no idea. You have no idea. The figures can be incorrect. Maybe something else is going on that I haven't fully grasped just yet. Nevertheless, guess what? The gold price is 4,000. The silver price is 48.50 in the market. Your intelligence is superfluous when you're this stunning. You don't need any knowledge when you look this amazing, man. In any case, I'll do my best to unravel the enigma here, and you can find more information on that on Substack's Endgame Investor. However, this will not go on in any case. I have no idea how much time it has left.